Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be discussing and talking about some fundamental factors to be paying attention to as we head into 2024, given the bullish outlook that we've seen as we ended the year in 2023. If you all enjoy these video breakdowns, go ahead and do us a favor. Smash that thumbs up button, subscribe to the platform. We do appreciate the love and the support. Let's jump in. So we're going to start here with this fundamental piece where it goes on to talk about some US data to be paying attention to as we head into the first full week of the year 2024. Now, we had been talking about this in previous video breakdowns. I want to first take your attention over to the dollar. Now, everybody is super optimistic about the cryptocurrency market, and that I am myself. However, we need to take into consideration the possibility of strength coming back to the dollar if we do not see a continued decline in inflation data and a continuous weakening in the labor market, i.e. bolstering the support of the US economy, giving strength back to the dollar. These are things that I've been telling everybody to pay attention to. We're going to get into some specific dates to be paying attention to in January, so that way you can track this fundamental data yourself. Now, I've shown you guys in previous video breakdowns looking at historical data on the US dollar given previous bull market cycles. Now, obviously, of course, whether history repeats itself or not is up for debate. But I've shown you guys how in previous bull market cycles back in 2017 and 2020 rolling over into 2021, the two significant key psychological levels that we broke on the dollar that started the bull market cycles in both years was the 102.800 and the 98.300. So with that being said, last year in 2023, it's weird saying that now, we did break below the 102.800, but we failed to break this previous bullish leg, where you can see back in July 2023, we had that increased strength in the dollar. And since then, from October 2023 till now, we have retraced from that previous bullish move, but we have failed to take out the previous low. Not only that, but we have also failed to come down into the 98.300 major psychological level, where historically that solidified the bull market cycles back in 2017 and 2020 to 2021. So as we go throughout the year of 2024, both in Q1, Q2, we need to be paying attention to inflation data and labor market data. Remember, the narrative that's driving risk on market sentiment is this Fed rate cut narrative, right? Where the markets right now are pricing, and I believe Bloomberg put out a report saying that 73% of the market expectation is that the Fed's going to cut rates sometime in March. And then there's like a 83 or maybe 93% chance that by June of this year, the Federal Reserve is set to cut rates even further. So just take those things into consideration, that at any point in time, that market sentiment could shift if we see higher inflation readings and robust labor market data. Remember that driving that narrative has been a decline month over month in inflation data, where the inflation is heading down towards the goal of the Federal Reserve of 2%. So if we see that sentiment change because of higher inflation readings in Q1 and Q2 2024, most likely what is that going to do? It's going to drive strength back to the US dollar. It's going to prompt a risk-off market mood and most likely cause a pullback in the cryptocurrency market. That's obviously, of course, excluding the Bitcoin ETF narrative, approval, or any demand that could flood into the market because of the Bitcoin ETF. I'm not talking about that specifically right now. I'm just talking about fundamentals that could drive risk on or risk off market mood. So over to this fundamental piece, it's talking about this week, what this week's US non-farm payroll could mean for Bitcoin. The US Bureau of Labor Statistics will release its December non-farm payroll report on January 5th, 2024. The US Federal Reserve was optimistic about the economy at its last meeting of 2024. but it will face a conundrum if the jobs market didn't cool in December, making the future of Bitcoin slightly uncertain. In November, the non-farm payrolls report reported that U.S. jobs grew from 150,000 in October to 199,000 in November, stoking hopes that the U.S. economy had finally reached the Goldilocks moment, and inflation has been getting closer to 2% recently, which I mentioned to you all also in previous video breakdowns. That has been driving the risk on market sentiment. But some economists warn that it's not all a bed of roses. Former New York Fed President Bill Dudley believes that markets may have overreacted to the Fed's implied pivot away from tightening. So that in particular is what I'm trying to get you all to focus. Remember that the whole entire narrative driving risk on sentiment and stocks and crypto has been that the Federal Reserve is going to cut rates. The market has been pricing that in. However, those are all rumors. It is not fact yet in the market. So just understand that on the drop of a dime, if that data via inflation data or labor market data switches hands or changes, where instead of a decline in inflation, we see an increase in inflation, that entire sentiment is going to change. Remember that the Federal Reserve in previous FOMC meetings and statements has openly said that if they do not continue to see a decrease or a decline in inflation and instead see an increase or an uptick in inflation, they will take proactive measures and they will not hesitate to hike rates again. So just be reactive. Remember that a higher interest rate environment is bad for risk assets. So take those things into consideration. Considering the recent uptick that we've just seen in the cryptocurrency market, be reactive. And if we do see a decline in the price of digital assets, in my personal opinion, I will just see that as a buying opportunity. I'm not saying it's a bad thing at all, but just take that into consideration given your risk tolerance and where you're deciding to implement capital into the market, given the dates that I'm going to show you here in just 1 second. So some things to be paying attention to as we go through the month of January. You can see here, you can see the data in which that article was talking about: non-farm employment change, unemployment claims, non-farm employment change down here, unemployment rates as well. So be paying attention to these factors, because any of these factors, if they come out robust or upbeat or optimistic for the US economy, that could drive strength back to the dollar. What we want to see is we want to see the dollar break below this previous July 2023 low and head towards the 98.300 for a continued risk on market sentiment and this rate cut narrative that's holding the most weight in the risk asset classes as we speak. Heading into next week, we have some major inflation data coming out on Thursday and Friday. So towards the end of next week, we have core CPI. We also have some unemployment claims to be paying attention to, and then we have core PPI and PPI month over month. So be paying attention to those dates as well. That's January 11th to January 12th for those significant data releases. And then the next major inflation data report we have for January is Friday the 26th, where we have core PCE price index. Now, this is the Federal Reserve's primary inflation measure, so be paying attention to this Friday, where again, if we see an increase in inflation or this data report, it could weigh on risk on assets. It is not guaranteed. I'm just attempting to give you all this information so that way you can be reactive to this data as it comes out. That is what we will be doing here at CYPRX. And then the following week after that, Wednesday, January 31st, we have the federal funds rate and the FOMC statement. So if all throughout the month of January, we happen to see an increase in inflation, then most likely what can you expect from the FOMC statement at the end of January? A hawkish response or remarks from the Federal Reserve, talking about bringing inflation down, putting rate hikes back on the table. That's most likely going to weigh on risk assets. Again, this is not guaranteed. This is just a forward-looking projection. What we want to see as risk asset investors, predominantly in the cryptocurrency markets, not so focused on the stock markets. I personally don't invest in the stock markets, but what we want to see is we want to see a decrease in inflation. We do not want to see an increase in inflation, and we want to see weakening labor market data. So that way we can project that the FOMC meeting and federal funds rate, the statements from the FOMC meeting are going to come out dovish, with this continued sentiment that the Federal Reserve is going to cut rates in 2024, i.e. in Q1 or Q2. So be paying attention to that. I thought that I'd share that data with you all. Now, none of this has anything to do with the Bitcoin ETF approval. If the Bitcoin ETF gets approved, there's a lot of he say, she say, sell the news, buy the news, whatever the case may be. In my personal opinion, it's going to cause massive demand for the cryptocurrency asset class as a whole. You have to think of all the individuals that are going to be coming through that door once Bitcoin ETFs get approved. Now, that's not to say that they're going to get approved on January 10th. I've shown you guys in previous video breakdowns that there are approval dates for Bitcoin spot ETFs all the way out until May of this year. So whether it gets approved in January of this year or later on in the year, I don't think that people should be so focused on when they get approved, because eventually they will get approved. What people should be focused on is how they're positioning themselves now, how they're assessing their risk in the now. If you're buying Bitcoin at $40,000, you have to take into consideration if the market does experience a decline in price where Bitcoin goes down, can you handle that market volatility mentally in the short term? Long term, we all know where this market is headed. And when I say long term, I'm talking about a year plus out. So if you're going to invest money in this space now, can you handle market volatility if we do so happen to experience some type of manipulative event where Bitcoin does decrease in value and we see a decline in price? Just ask yourself that question. I don't want to see anybody put money into this market now while Bitcoin is at 40,000, expecting price to go up and it doesn't, and then they mentally get wrecked because they did not prepare themselves for that type of volatility. That's not to say that that's going to happen. In my personal belief, it's going to be a positive driver for this market, whether it happens shortly after or a couple months thereafter. I have a firm belief that the Bitcoin ETF approval, whenever it does come into fruition, is going to drive massive demand for this market. Obviously, of course, once profit taking happens on Bitcoin, we most likely will see that money roll over into altcoins. Again, that's just my personal opinion. I think it's going to be extremely positive for the space. But here, this fundamental piece goes on to read, Goldman Sachs expects crypto markets to explode in 2024 as traditional institutions enter the space. Now, this is a fundamental piece that we've been talking about. We did not see back in 2017 and 2020. We did not see institutional adoption. This is happening now for the first time ever. And in my personal opinion, once one institution onboards into this space, just like this article reads, and just like I've been telling you guys, we're going to see a massive inflow month after month after month of institutions onboarding themselves into this space as we head into 2024 and beyond. This article goes on to read, Goldman Sachs predicts that institutional adoption and regulation of blockchains will mature digital assets in 2024. The bank's head of digital assets, Matthew, I'm not going to butcher his last name, said businesses that have experienced blockchain's efficiency are now scaling to maximize commercial opportunities as the markets await a Bitcoin exchange traded fund or ETF. The U.S. Securities and Exchange Commission has until January 10th, 2024. Again, everybody's focused so much on January 10th, 2024. Don't get mentally wrecked if the Bitcoin ETFs don't get approved and we see a depreciation in the price of Bitcoin. I cannot stress enough. You all understand that these markets are manipulated. And right now, via the masses, everything's being projected for January 10th, 2024. Eventually, they will all get approved. You have to understand that. Long term, this market is bullish. In the short term, again, nobody can predict market volatility or what's going to happen, whether we see a decrease or an increase in the price of digital assets upon this Bitcoin ETF date of January 10th. Just mentally prepare yourselves. If you can mentally prepare yourselves for either an up or down move and be reactive to the markets, it doesn't really matter what happens, as long as you know where this market's going long term, and that is trillions of dollars flooding into this space. So if you're going to plug money into this market now, be ready to see a potential downside move in the market. Also, obviously, of course, prepare yourself mentally for that upside move that the vast majority of individuals are expecting. So with that being said, as always, just trying to bring you guys the realest updated information. What we're predominantly focused on here at CYPRX is inflation and labor market data and the strength of the US dollar and economy. What we want to see as risk asset investors is we want to see lower inflation readings coming out, weakening labor market data, and we want to see the narrative that the Federal Reserve is going to cut rates, stay in the market. What we don't want to see is a hawkish Fed. What we don't want to see is higher inflation data or a robust and strengthening in the labor market. That would obviously, of course, weigh on risk assets. So as we head into 2024, via the first month of 2024, January, be paying attention to these things. Don't forget to follow us over on Instagram at CYPRX Trading Official. Link is in the description down below. We're going to be giving out our Delta Zones and fundamental updates on our story and our reels. So make sure that you all are following us over on that platform as well. Many blessings to you guys. Be cognizant, be aware out there. Smash that thumbs up button and subscribe, and I'll see you all in the next video breakdown.